What's up, gang? For today's video, I'm going to go over two intertwined subjects, being risk management and then trading psychology. Before I really get started here, I've been getting asked a lot about why I chose WeBull and why I use WeBull every single day for trading, especially options. And the reason being the fees. Fidelity is 65 cents per contract, very hard to negotiate down. E-Trade's 65 as well. I know this is harder for the overseas people where IBKR is probably your best bet. That's about 25 cents to 65 cents per contract. TD Ameritrade is the other common one. In TDA, you can negotiate down to as low as 15 cents a contract, but it's very hard to do and you need to have a substantial amount of money in there. WeBull, on the other hand, you can trade right away. Doesn't matter how much it is, and there's no fees. How much is in your account doesn't matter. There's no fees, and we can do the same things as well. They've also pushed back the 0DT to about 3 p.m. with buying, and in my opinion, that's perfectly fine. So if you do want to sign up for WeBull, I'll put a link in the description. Go ahead. But I do highly recommend it for smaller accounts, especially. But anyone trading options, I think WeBull's the way to go. There's multiple ways, we can play or use risk management. It's really dependent upon who you are as a person, how much risk you are willing to give into each play. As a smaller account, I know when I first started, I tried to stay around that 25%. I did start with about 500, so it was about $150 per play. And that can be a little bit tricky depending on the day. So, as I said, risk depends on how adverse to risk you are personally. It's also, important to note that the more you are willing to risk, the more you need in order, in terms of percentage and profit, in order to be profitable. If you keep a tight risk management, 20%, 30% plays will often pay or keep you more consistent. If you're hitting more of those home run type plays where you have 20 to 50% stop loss in play, your win percentage might be lower, but those wins usually are of higher if you are going to be profitable. In this case, the first thing, I'm an orb-based trader, right? So the first thing, high and low, this first 15 minutes, first three candles here on this 5-minute chart. High 397.68, low 395.62. In this case, I'm going to enter on a close above our high, right? And my stop loss is going to be set underneath a 5-minute close underneath the orb high. If I miss this here, as there is no retest can certainly help not only with confidence, conviction, but also the ability to stay in plays longer. No retest here, right? Cool. We can also use EMAs. In this case, there was a decent entry spot. Pre-market resistance here turned on a hammer candle. We're in a bullish trend. I'd set my stop loss right underneath this 398.3. In most cases, I do have a hard stop set at 15%. With SPY, it's a little bit different if you're playing 0DTs, but if you're playing further out, that 15% works very, very well. So another place where we look for good entries in an uptrend would be a hammer candle off of our EMAs. In this case, the 20 EMA. We are in a bullish trend as we see the 8 over the 20 and VWAP creating separation, knowing price will probably move a little bit faster. In this case, long lower wick candle right off of our EMA. In this case, I'm going to use that hard 10% stop loss if I enter on this candle. If you are a levels-based stop, I'd set that stop loss underneath the 20 EMA, a 5-minute close underneath that level. If you notice here, the point where we ultimately fall down and test back is that orb high. So this is another very high confidence spot, high conviction spot. We start to base, hammer candle, break through our EMAs, and a nice little push here into the day. In this case, say I enter here, it's going to be a little bit more tricky, especially if you're playing those 0DTs. It is about 2 o'clock. So theta is going to set in, theta decay is going to set in. And in this case, I'd keep my stop very, very tight. If I get stopped out, I might get stopped out once or twice here, but I'm looking to take those profits. In terms of scaling, first place I always like to scale is at 20%. And then the next place would be whatever I've established on the 1 hour time frame as a key area or a key level. In this case, some of the levels are cleared, but that 398.3 big level. So say, I enter in here, cool. In this case over here, we see high a day, that would probably be my target after the 20%. My last scaling is going to be runners, and I'm just going to move my stop loss up. Another thing to note, once I'm about 10-15% profitable, I always move my stop loss up to break even. On WeBull, not as sure on TD Ameritrade, but those stops, depending on the spread of the ticker, can be skipped. So I usually set them about one above break even just to ensure that I'm as close to break even as possible. And this has worked decently well. Another thing to think about when it comes to the psychology piece of this is if you are emotionally trading, you are probably sized in too heavy. If you're sized in too heavy, those emotions come into play. So that's where sizing comes into play. If you're not comfortable or don't think it's an A+ setup, right, maybe just try one contract or 10%, 5%, whatever it may be, depending on your account size. That is one thing that really helps when it comes to trading psychology. Now, when it comes to thinking on what to enter in terms of calls, so there are a couple ways that I like to think before entering into a play, and one is bullish buy it. But I also need to keep in mind what the intraday trend is, and this is why I love to use EMAs because they do show me the trend, right? In this case, bearish trend, but we do base here after a bullish push in the morning, which we would in fact call a pullback entry here. Cool. Secondly, pullbacks to the EMAs. I'd love to see more pullbacks to the 20 than the 8. 8 can be a little bit choppy. But in terms of a pullback entry, that entry of a hammer candle, in this case off the 20 EMA, is a very high confidence spot to enter into calls. On the flip side with puts would just be the inverse downtrend, enter off of the 20 EMA retest. Like to see longer upper wicks there, shooting stars the most preferable. Another thing that goes into risk management that I don't think is talked about all that much would be bid-ask spreads and knowing the spreads of the tickers you are playing. Tickers, SPY, QQQ, Apple are pretty tight spreads. So we could use a market order in this case. Tickers like UPST, AFRM, even Tesla. Tesla has a greater range, so I wouldn't put it in there as closely as those other two names. But they are spreadier tickers, right? So being able to buy at that ask price is going to put you down probably 10 to 15% right off the bat. And for that reason, that's why I love playing SPY, QQQ, is I don't really have to worry about the liquidity. I don't have to worry about where my fill is going to be as much as I do with those names, such as UPST. Especially the other day, UPST gapped down, AFRM gapped up, had earnings that are pretty similar in terms of their sector. So UPST's spreads were absolutely terrible. In that case, I probably wouldn't even play it just because that puts in play, being down right off the jump. I'm not going to use a market order on a very spready ticker. I can use a market order on these names, SPY, QQ, Apple, where the spreads are pretty tight. And the reason being, I know I'm going to get a decent fill. It's also very important to wait on a 5-minute candle close. In this case, obviously this is past trading days, but in this case, if you were to try to take calls here and we get this bottom wick candle, upper wick candle that closes back below, you probably would have been stopped out very fast, and you would, panicked, right? And that's where waiting on the 5-minute candle close can help with that trading psych, can take away that panic mode, that panic selling. And then next thing you know, it rips back up. If you don't have a stop, cool, you win. You're profitable, but this doesn't always happen. If you lose and then look back later, you're like, damn, why didn't I keep it? And that goes to affect your mental. But the best way to practice trading psychology is simply just screen time, going through plays, entering plays, and responding, why did I lose? Why did I win? This is great. But also to go along with that would be contracts, how much you're sizing, and don't put too much on the line that, you're willing to blow up your account just based off of one play, just based off greed, just based off bias. Make reasonable sizing when it comes to your plays. We don't want one play blowing up our entire account. A little bit harder to do as a smaller account than it is a bigger account. But on the flip side of that, we're going to have to take risk in order to make money in this market. To make money in any market there is risk implied when trading options in general. So that's one thing. Trying to find a happy medium between too much in terms of sizing and just the right amount. If you are getting nervous, if you're getting emotional when trading, you're probably sized in too heavy. So find, for me, I have to reset my account each month just so that, because I'm comfortable with that starting balance, right? Once we get a little bit higher, I start to get a little bit more emotional when trading, and I don't really trade based off price action. I trade more based off of emotions. So that's one thing that has really helped me a lot in terms of being less emotional when I am trading. The biggest thing when it comes to psych, not only screen time and actually playing things, is not having a bias come into the day. That's why I love being able to play both sides. Yesterday's price action, I guess Friday's price action here, probably a lot of bearish bias coming in, but we actually had a pretty bullish day, decent trend day here. So if we're trying to slam those puts, say on this level here, we're going to get blown up really fast. So come in, seeing both ways and taking the bias out. There could be a side that, could move faster based off VPA gaps, and that's perfectly cool. But once we are in a trade, once we are looking to trade, take that bias out and read candle types, read patterns, and read your EMAs along with key levels to make a better decision, a better informed decision that can lead to higher profitability rates.